Hey everyone, welcome back. So in today's episode, we are going to talk about Tesla's earnings, which are due to come out after market close on April 26th. Now, this is really fun video for me to shoot because again, I started investing in Tesla for fun, and after a few thousand shares, I'm still having a blast with this company. I feel what they're doing to change the world is mind-blowing, and on top of it, they are giving the investors what they need, is catalyst. So this video, I'm going to break down how I feel Tesla's stock is going to react after the earnings and what Wall Street is looking for. They are looking for that one number. Of course, there is energy, of course, there is solar, but I feel all Wall Street analysts and all the other analysts are looking for that one number to prove Tesla is doing good or Tesla is doing bad. So let me not waste any time and let's make this video as interesting and as quick as possible. Okay, so what is Wall Street looking for? So first of all, let's talk about earnings and revenue growth. 3 times growth from the previous year, which of course Q1 of 2020 versus as compared to Q1. That's what they're expecting, okay? Anything less, they'll not be too happy. But again, this is nothing. They're looking for that one thing that I'm going to share with you in just a minute. The other thing is that expected revenue of $10 billion is what Wall Street is estimating, that Tesla will have a $10 billion revenue. In my personal opinion, I don't feel Tesla will reach $10 billion in Q1. I have my reasons I'm going to share in a second, but I feel that that all the analysts are estimating $10 billion in revenue, which is up from $6 billion just a year ago. Okay, number 2. What Wall Street is looking for in Tesla's earnings. This is where it gets really exciting. They are looking for gross profit percentage excluding regulatory credits. Regulatory credits not included how much money Tesla made from their car sales revenue. I'm only talking about car sale revenue. I'm not talking about solar. I'm not talking about energy. This video is only about car sales revenue and what Wall Street is looking for. Then also future vehicle delivery expectation from Musk. You know, how much Musk thinks that they can deliver in 2021. Now, Wall Street is estimating that Tesla will deliver around 840,000 vehicles. In my personal opinion, they will blow past that. They are going to deliver right at 1 million or maybe a little bit more, because we know Tesla always under promise and over deliver. So number 3, they're going to discuss chip shortages. That's what they're listening in the conference call, in the earnings call, that okay, how Tesla will navigate the global chip shortage. How are they going to react? I don't believe it's going to happen, but again, every car manufacturer, every tech manufacturer is right now facing chip shortage, and Tesla is no different. These are the 2 things that I feel during the earnings call will be really, really important for Tesla investors and analysts to kind of listen to. Now, let's talk about what's one thing that Tesla analysts will be looking for very carefully in Tesla's earnings when they come out and when they release their financials. So I have the financials from last year, so I'm going to pull that up now, and I'm going to show you what analysts are actually looking for in these numbers. You know, of course, revenue is important. Of course, gross profit is important. Of course, net revenue, everything is important here. I'm not saying that, but I think the stock will move up and down, will be decided on this number. So over here in the revenue section, you see here, this is the total revenue, and this is what they see as gross profit margin right here. Total gross profit was about $2 billion. Okay, so what we are going to do is we are going to use this number right here. We are going to use this number right here, and we are going to subtract the regulatory credits from last time. It's right here. When we subtract it, the number that we are going to get, we are going to divide that number with the total revenue right here. That's the percentage that we are looking for. Now, I have prepared a sheet. I'm going to share that sheet with you over here in just 1 second, that I have already done that, comparing the last 3 quarters and how stock price moved based on that number. In this sheet, let's all take a look at Q3 of 2020. So the total revenue was 7.6 billion. The gross profit was about 2 billion, and we have the credits of about 397 million. So what we did is we subtracted this from this, and we got this number that we divided with the total revenue that gave us the percentage of about 21.89%. This was the gross profit excluding the regulatory credits. Right along with that, see how stock reacted, because it was up from last year. Last year, the profit was 16.2%, excluding the regulatory credit, and this year it increased to 21.89%. See how stock reacted given that number. Stock reacted very positively, stock price went up. The following quarter, which was last quarter, Q4 of 2020, the whole thing with the same formula that we did resulted in a gross profit excluding regulatory credits of 17.88%, and look what the stock price did. It dipped the next day. So this is the number, in my opinion. It's very, very important for analysts, Wall Street people, institutional investors to continue putting money in Tesla, to buy more and more now or late. I think those kind of decisions are based on this. In my opinion, the Q1 of 2021, I feel the revenue is going to be close to $9 billion. I think really higher eights, close to 9, for two reasons. Number one, there was no SNX production during Q1. There was February was a short month, Chinese New Year, and of course the first week is a little bit slow, or first quarter, sorry, is a little bit slower for all auto manufacturer as compared to other quarters. So I feel we are going to see about 9 billion of total revenue, and I feel total gross profit will be close to 2 billion, not exactly 2 billion, and because they were, again, their highest profit margin vehicle, which was SNX, was not in the line. There was only Model 3 and Y, even though the volumes were up, but still the total profit, I feel, is kind of right around 2 billion or a little less than 2 billion. Regulatory credits, I'm putting it at 350. Of course, it's totally unpredictable. I don't know what it's going to be, but looking at the trend, I feel that Q1 is always less than Q4, because again, the companies are retooling, they're deciding how they're going to produce for the rest of the year. There are so many numbers that they have to kind of refactor for the rest of the year. If you see here also, the Q2 was 428, and then it went down in Q3, then it came up in Q4. So it's always doing that up and down quarter over quarter. That's why I feel that we are going to see this that's why I feel that we are going to see this at about $350 million. In my opinion, it could be a little bit less, a little bit more. This is what I feel. That gives us a total of 1.6 billion. If we divide the total revenue, that gives us a percentage of about 17.78%, which is very close to the previous percentage of gross profit margin, excluding regulatory credits. So in my opinion, the stock price after the earnings call on Monday, the Tuesday, is going to be a little bit down, if not flat. I don't see the stock price flying. Again, if they report something so drastic that their solar or the energy was through the roof, because solar is kind of disappointing from last few quarters, and I expect solar to be disappointing because again, they're doing so much in solar, they're trying to expand, they're trying to do a lot of R&D. It's going to take another year before solar can be hugely profitable and can start showing in Tesla's financials. So I feel that Tesla stock price is going to be a little bit down right after the earnings on Tuesday. Again, this is from basing on the gross profit margin, which I think all the analysts and all the Wall Street people look very carefully, because again, credits can go away. So what did Tesla do really if there were no credits in existence and if Tesla was only making profit? I'm very confident of saying here that if this number touches 22%, which is higher than the previous year that they have, I feel Tesla stock is going to the moon. Guys, I mean, there's no stopping. That stock is going to just tear everything apart and just go to the moon. That's what I feel if they reach that 22% or higher. You know, I think Tesla has the capability of reaching up to 25%, and that's where Cathie Wood and ARK Invest and everybody is basing that their profit margin is going to be so huge. So I think we have a very high chance of seeing Tesla stock move a little bit down, or if not flat, on Tuesday with the numbers. But again, leading up to the earnings, we saw that the increase, and when people see that their gross profit excluding credits have went down a little bit, if not flat, the stock is going to go down. And that is the time when we as investors have a huge opportunity of playing Tesla, of adding more Tesla or adding Tesla options. I did a video on Tesla put options. I'm going to link it here. But I think the day after the earnings is always, for me, the most busiest day of adding more positions in my portfolio. So I really hope that I was able to provide you some information. This is my prediction, entertainment purposes only. I could be flat out wrong, but I feel that we have a strong possibility of adding more Tesla, more happy days for us investors. And if I provide any value to you, and if you get anything out of the video, please hit that like, share, and subscribe button. Thank you so much for tuning in. Until next time, you all have a wonderful day.